All right, everyone. We will go ahead and get started. Before I hand it over to our presenters, just a few reminders for you guys. If you do have any questions, please feel free to use the Q&A box located on your menu bar, or you can use the chat feature. We will save a lot of the questions for the end during a Q&A. And just a reminder that this webinar is not for CPE credit. So we will go ahead and get started. And Mel, you should have control.
Oh, thank you, Angie, and thank everyone. Glad that you could join us today. My name is Mel Schwartz. I'm in Washington D.C. and the Director of Legislative Affairs for the firm. Angie Ziegler is joining us today. She is the National Senior Manager in charge of the Business Operations Services. And is really, I think, the one who is probably more on the firing line than I am, but at least with regard to this issue. But Angie's got a lot to do, so they let me talk as well. If we look, and I think that the slides were made available to you probably with the 1 hour notice before this had started. So if you have printed those, if you would like to print those, if you would like to save them, that's where you can go to look for that. What we want to cover today is, first of all, what the president asked for and what the Internal Revenue Service was able to give him, which is Notice 2020-65, which answers some questions and leaves some other questions unanswered. One of the questions that is left unanswered, at least specifically, is whether or not this deferral is mandatory. Remember, what we're talking about here is the deferral of the employee's share of payroll taxes for as much as the 4 last months of 2020. And once we get past that, then we get to the to next steps. And that is, I think, where we will, I expect, see the bulk of the questions coming in. But that is, at this point, a lot of where we need to start. Now, so let's begin. What did the president ask for? And what he asked for, and I think it's notable here that the president, or at least the president's staff, was very, very careful to set forth a request that did not require any congressional action and that did not or would not likely be subject to judicial challenge. And the approach that was taken was to ask the Secretary of the Treasury to use his authority pursuant to 7508A, which has been a section in the Internal Revenue Code for quite a while, to defer withholding, deposit, and payment of Social Security taxes. If you have employees who are involved with the railroad retirement system, it's essentially the equivalent group of taxes there. And it is wanted to be deferred here for the 4 months that would remain in 2020. They was going to put a cap on it, so this was not for extremely well-paid people. And the number that they came up with was $4,000 and stated that as a bi-weekly pay amount. And what this does is it defers without penalties, interest, or additional amounts, or any other kind of addition to tax through both the deferral period, the last 4 months of 2020, and also the non-payment period, the period that we have after 2020 to finally get the money in. And it's sort of as a last thing they throw in, well, Secretary of the Treasury, we'd like to eliminate these eventually, but we know we can't do that without legislative activity. There's no time for legislative activity right now. This is what the president and the president's staff felt he could do comfortably without challenge. And so let's go and see how the IRS implemented this. And keep in mind, a key here is that the implementation is under 7508A. This is the provision that came in roughly after Katrina, which formalized rules that said if you're subject to a disaster, then we'll forgive you keeping up with your tax filings, with your tax payments for a period of time. Now, a very important point with regard to the IRS notice. The IRS notice is not addressed to the employee. It is addressed to the employer. That is who they call the, quote, applicable taxpayer in the notice. Now, what it allows is for the employer to defer the act of withholding of the employee's side of Social Security taxes again, and prevents the employer from being assessed penalties during the period that is being deferred and also the period that we take before it has to be deposited. And Angie, I believe, is going to go into some details with regard to what those dates are. Very important as well. There's a footnote in Notice 2020-65, which at least indicates the IRS belief that the only thing they are using their authority to do is to defer the withholding. A deferral of the deposit requirement and a deferral of the penalties follows because the withholding is being delayed, is being deferred. If for whatever reason withholding is not deferred, the employer continues to withhold on the same basis that it traditionally has been withholding, the deposit is not deferred. If you withhold, then you need to pay it in under the regular rules with regard to payment with your quarterly 941s. Scope, again, we talked about the deferral here is of the Social Security, the so-called OASDI portion, not the Medicare portion, and not the employer's portion. We had a deferral of the employer's portion that was enacted as part of the CARES Act back in the spring. So we're only talking now about the employee's share of the Social Security taxes, and it relates to compensation that is paid. Underline that word paid on a pay date between September 1st and December 31st of 2020. And the importance of focusing on the pay date is that it's the date of payment that controls, not the date on which the pay was earned or even the period to which the payment relates. So for example, if a payment was due on September 1st, that payment, the Social Security taxes, employee's share of Social Security taxes associated with that payment is eligible for the deferral, regardless of the fact that what you're paying for is work that was done in August. It's the pay date that counts. Similarly, when we get to the end of the year, if the check's not coming out on December 31st, or the deposit's not being made to the bank account on December 31st, then it's going to fall into the following year. And unless we see an extension of this, that payment would not qualify for the deferral. At this point, I'm going to turn things over to Angie, who's going to talk a little bit more about some of these details. And then we'll get to the question that I know several of you have already asked, which is, do we really have to do this thing? Angie?
Thanks, Mel. I'm seeing those questions come in too about if this is an opt-in or opt-out option for our employers. So as Mel said, I'm in charge of the payroll group at Eide Bailey with our service that we do for business outsourcing for our clients. And we are kind of in the dirt with this payroll rules that are coming through for all these COVID assistant programs. And this executive order came in and it did not give a very a long time for software companies to get ready for this, for us to understand guidance or even to have guidance on this executive order. So what we're going to go over in these next few slides are if the employer has decided to move forward with opting in on this employee tax deferral, here are some of the guidelines that you have to be watching for every single payroll, the thresholds for the payments that your employees are receiving based on whatever your payroll frequency is. So one of the breakouts that we have here for our compensation is, the executive order itself came out with the biweekly pay period must be less than $4,000, or we have the other payroll frequencies of weekly, semi-monthly, and monthly, with $2,000, $4,333 for semi-monthly, and our monthly payrolls at $8,667. So as this is coming through, each payroll stands on its own. So this one was kind of surprising to us in the payroll industry, because usually when payroll, once you meet a threshold, that means you're done. And this is coming in saying that actually that you might not meet the payroll period, this payroll, but next period, then you can still opt out of the employee tax deferral. Some of these come into play with bonus, commission, overtime that affects maybe a pay period. And so that's where we're coming in over that $4,000. We're going to give you guys some examples here on this one here is a semi-monthly payroll. And what we have is employee receives a gross salary of $4,300. So just to remind you, the wage threshold for a semi-monthly is $4,333. So this employee is being paid on the 15th and the last day of each month. So with this example, the employee Social Security tax are eligible for deferral for compensation paid September 15th through December 31st, because this is exactly as Mel was talking about, is that this went into effect September 1st. So the first payroll would be the 15th because that's going to be their first payroll in September. Here's maybe a more detailed example. We can apply this with bonuses, overtime. The commission is the example we have here, is that the employee receives a gross salary of $4,300 on the 15th and last day of each month. So we're back into our semi-monthly payroll. They also receive on October 31st a $40,000 commission. So with this payroll example, what we have is that the employee Social Security tax, they'll be able to defer for the Social Security except for October 31st. They will not be eligible because they went over the $4,333 because they received a $40,000 commission. On top of this, you have to make sure you're watching your payroll software because the Social Security tax has that wage limit of $137,700. And once that has been met, then there is no more Social Security tax being withheld for the employee or the employer. So this is on a per payroll basis that these limits have to be watched per employee if the employer is choosing to opt into this payroll tax deferral for the employee. So then as from September 1 to December 31st, as they are deferring the employee Social Security tax, we have to then watch in the payment back to the IRS with the Social Security tax for the employee. So what they have for the rules at this point is withholding and payment that was deferred. You have to begin paying it back between January 1st, 2021 and ending April 30th, 2021. And in payroll, if we understand penalties and interest, they are very high for payroll, that if you have not paid it back by April 30th, that the interest and penalties will start to accrue on May 1st, 2021. And we want to remind you that the employer is the one who is responsible for collecting this from the employees to pay it back to the IRS for what was deferred. So I want to really kind of hone in on the fact that it's the employer, not the employee, that is responsible for collecting this. So with payroll, we have to do reporting. So as we withhold and don't withhold, we have to make sure that we are sending to the IRS information about our payroll and our tax payments. So we went into a draft mode with that 941 form for second quarter 2020 to bring in all of those COVID assistant programs that went into effect back in April. And now on August 28th, the 941 went back into a draft mode for third quarter. and we are hoping that there is going to be a release of that form come in the end of September, which is a really important date because October 1 is when we start wanting to file our third quarter payroll returns. So the things that they're changing on the 941 form as it stands today is line 13B and line 24. So on second quarter's line 13B, they had a wording on here of deferred employer Social Security tax, which they removed the employer from this. And they are saying all deferred amount of Social Security tax. So that would be if you, the employer, decided to do it with the CARES Act, and now with the executive order, you wanted to do it with the employee. Then line 24 comes in, and this one is changed from quarter to also, that now they're saying, but now tell us how much in line 13B is for the employee, not the employer. So just what is the employee's share of Social Security tax? The 941X, we've been waiting for that to be released even from second quarter. So if anything was filed that needs to have corrections, there has not been a live 941X form yet. But we are also being told that that's supposed to be released the end of September. That should also incorporate some of these new changes. Some of the things that we're kind of waiting to see is now that this executive order has come into place, that this is the first time out of any of these COVID CARES Acts that is now actually affecting the employee. Everything else has been more the employer. So this will make some changes happen to our Form W-2. So we're waiting for more guidance on, how are they going to be changing that form, and how do we need to have our software companies start to set this up so that when you're running your payroll, this normally will flow into your 941 and the data will flow into your W-2. So how are they going to be able to quickly make some of these development changes so that we don't have such a manual process come the end of the year? So those are some of the things that we're seeing in the payroll, and we're kind of waiting to see the release dates on these forms, and then also what are we going to be expected to do come the W-2 forms. I'm going to turn it back over to you, Mel, just to talk about our next steps.
Well, thank you, Angie. And that, I guess, brings us to the question that many of you have been asking. Do you, as the employer, have to participate? And the answer pretty clearly is no. It is the employer that the notice is directed to. 7508A deals with what the taxpayer has to do, and in that case, the taxpayer is in fact, or the remitter, the filer is the employer. So all indications are, and on top of that, Secretary Mnuchin has at least informally said that he does not intend for this to be a mandatory thing. It is the employer's choice to participate or not. And further, it really appears, again, because of the reference back to the emergency provision, the Katrina provision, that there's a fair amount of variability that employers can choose to deal with here. For instance, let's say you are not prepared to participate from September 1, but come later in the year, decide, yeah, okay, I'm going to go ahead and do this. It looks apparent that there is no problem with starting the deferral of the withholding sometime after September 1st, maybe in October, maybe in November. What you cannot do is extend the deferral beyond December 31st. But as far as the start date, all appearances are that that is something that is within the control of the employer. Another question that Angie and I have seen come in from a number of our clients is, we might make this available to some of our employees. Do we have to, is this an all or nothing choice? And again, the answer is no, it does not. There's nothing here that indicates this has to be all or nothing. If you defer withholding on one employee, then you defer with regard to that employee. It does not somehow trigger a need to defer withholding on all your employees, nor is there a situation that it would prevent you from deferring the withholding with respect to those that, let's say you chose to give the employees a choice. You don't have to, but you choose, the employer choose to give the employees a choice. Some want to, some don't want to, and that's perfectly fine. Now, oops, wrong button. What are the pros and cons of participating? Well, a couple of pros, and in many ways, I think these are not necessarily tax pros. These are human resources pros. These are political pros. These are public relations pros. Yet, the president told employees that he was going to do something that allowed them not to have to pay their Social Security taxes for the rest of this year and then catch up next year. Okay. Are your employees expecting that to be available? The federal workforce has been told that it's going to apply to them. Apparently, the military has been told that it's going to apply to them. Their taxes, their withholding is going to be deferred for these 4 months. Do your employees come and say, well, wait a minute, if it's good for them, how come it wouldn't be good for me? Plus, the reason the president raised this was a desire to stimulate the economy, to put more money in people's pockets that they could spend. And there is something to be said for saying we're with the president and we support his efforts to restart the economy. On the other hand, there are a number of cons, and these maybe have more of a tax feel, but they are definite cons. First of all, the concept behind this seems to be that the expectation is we're not going to withhold the Social Security, employee Social Security taxes for the last 4 months of 2020, and we're going to catch up by double withholding for the first 4 months of 2021, because that takes us through the point in time when we've suddenly got to have all the money back in. Does your employee want to face that smaller paycheck in 2021 in order to have a slightly larger paycheck in 2020? Perhaps from at least many employers' point of view, more importantly is, okay, we could do that if the employee is still here, if he still makes as much through the end of April 2021. What if he leaves? It's clear that the IRS is going to look to the employer to pay these taxes. So if the employer leaves, the employee leaves, the employer is on the hook. Now, the notice did point out that it is expected that other arrangements for repayment could be made. And certainly if there is going to be, if you're going to participate, and you don't have to elect, you just participate. If you're going to participate as an employer in this, then I think you definitely want to be looking at providing, making sure there is some sort of agreement that you as the employer are made whole of any taxes that have to be paid on behalf of an employee who, for whatever reason, cannot be withheld on in 2021. But be careful with this, because now you get into questions, and even you get into questions just with regard to recovery. There's all sorts of state laws that apply in the employment field. And I would strongly urge you to consult with attorneys in the states that you're operating and make sure that nothing in your agreement, nothing in your plans runs afoul. And Angie, I know you have raised some particular concerns here with regard to the expected concept of recovering this over the first 4 months of 2021.
Correct. One of the concerns that we had was making sure that if you have an employee that you try to take out extra tax, or you know they're leaving, so you want to try and recoup as much of that tax of the deferral as you can, you have to be careful that you're not violating state minimum wage rules and taking that employee below the state minimum wage. Some of the other things to do with some of these deductions, taking them from employees, is that a lot of states have a requirement that if you are going to withhold from an employee's paycheck, that you have to have a signed document from that employee allowing you to withhold extra pay from that employee's paycheck. And so that comes another con is there any sort of guidance at this point that has a written document that you can give to your employees explaining that they are deferring and they are required to pay this back, and that they know the time frames of when that is, and that they sign that agreeing that you can withhold extra from their paychecks.
And I think those are very important things to keep in mind. I guess a couple of other cons to throw in here, and Angie may want to comment on this as well. This is not necessarily that simple a reprogramming process of your payroll system. And one wonders whether your current payroll provider is going to be comfortable charging the same rates over time if they advance this additional service to you. Also, I would go back to the point that this is not you don't have to decide to participate today. You don't have to have decided to participate on September 1st. There is an ability to wait and see what other employers are doing, how employees are reacting. We're already hearing from some of the federal groups, including some of the military people, that they don't like this idea that they may have an over-withholding in 2021 to make up for this, and would just as soon be left out of the whole process. I think that the federal government has said, sorry, that's not available. We're deciding, we're the employer, and we're going to participate. But it may be that for some employers that would be a viable alternative is to wait and see how this does play out and how this is received, and move forward at that point in time. And with that, that completes, here, I've got to do that. Yep, completes the formal part that we have. And Angie, we've had a number of questions come in, and we can take some extra, for those of you who want to stay with us past the half-hour designated time, we will try and stay on and answer some of these questions. For those of you who have heard what they wanted to hear, no, I don't have to participate. Thank you for joining us, and we look forward to your joining us the next time we have one of these 30-minute webcasts.
Yeah, Mel, I've kind of gone through a couple of these questions, and we're seeing quite a few that are very similar. And I think just to summarize what you have said and what we've talked about today is that first, the employer has to decide if they want to do this or not. And like we've said, that this is the employer option to opt out of not even participating in this and carrying on payroll as is through the end of the year. And if they choose later on to do it, they sure can. And after the employer has decided if they are going to do it, then it is having the conversation with every single employee on if they are wanting to, if you want to do all or nothing, or have them opt in or opt out. You know, and we said that, you know, we definitely recommend getting some sort of a signed document from your employees and making sure that they understand the rules of what this deferral means. You defer for 4 months and then you double pay tax for 4 months. So making sure that they are understanding this. And another few questions that have come through is very much in, you, the employer, are responsible for paying this back in January through April 30th. So if your employee does leave, that puts you on the hook for this, and you are going to be paying that back in for the employee as of right now with the way the rules stand today. So this is, you know, quite a few of the questions that came through, Mel, are on that level of questions.
I think a couple of interesting ones that I saw that I think is worth addressing. We did see at least one question come in, which referred back to the issue of, well, can we continue to withhold from the employee and put it someplace safe, and then deposit it sometime later on. I have heard some commentators suggest that they could get to that answer. I think it's very, very clear from the notice that that is not the answer the IRS believes is the answer. If you withhold, then you need to deposit under the current circumstances. Another question that has, the one that just came up, I think this is a very interesting question. Does the deferral impact the employee's contribution to their Social Security amount? It does not impact the employee with respect to the number of quarters that they have earned, the Social Security that they are ultimately going to be able to receive. Because remember, at least the way this is structured right now, that tax is going to be paid. It's just going to be paid on a 4-month deferred basis and not immediately. So it should not affect it may affect what goes on the W-2, as Angie said, and we have no idea how they're going to sort that one out. But it should not have any effect on the ability for an employee ultimately to qualify for Social Security or the amount of Social Security payment that they ultimately gives. Now, going back to the President's original memorandum, the last item that we mentioned there, and the last item that he mentions in his memorandum, is he requests the Secretary of the Treasury to explore opportunities, including through legislation, to forgive amounts that are deferred under this program. That may well come about, but it is certainly not something that is presently there. And given the difficulty that Congress is facing right now, and the only reason the President came up with this memorandum and the other 3 items that he came up with at the end of August was Congress was not able to get together and pass additional COVID-19 related legislation. Yes, such legislation ultimately might be enacted, but we don't know when. We don't really know if. And you're somewhat throwing the dice with regard to expecting Congress to do much of anything these days. It is a extraordinarily partisan environment there right now. And many things that have seemed to most of us to be automatic and probably supported by a significant majority of both parties have run afoul of the conflict between the partisan conflict between the parties. That is a decision that each employer needs to make on its own. Plus, we don't know, let's say there is legislation, we don't really know what that legislation might say. If the legislation says we forgive taxes that were deferred, then that creates an enormous dichotomy between those employees whose employers chose to participate and those employees whose employer chose not to participate. We don't know that that's how it would come out, particularly if that becomes a tax forgiveness primarily for bureaucrats, because the feds are the ones who primarily are buying into the procedures. Yeah, I question whether that is the way the legislation would come out. It may be just as likely that if they're going to forgive, they will forgive taxes that are paid, or taxes that either were deferred or could have been deferred. And but again, you're gambling on what Congress ultimately does, and that is, in the current situation, certainly definitely a gamble. We have not heard from any of the leadership on either the Senate or the House that this is a done deal, that that kind of legislation is likely to be passed. And I know that that would be, it would be good if we could give you a straight answer or a firm answer on that one, but that's just not the case. It's something that you know, maybe we'll know more as we go forward. What happens in the election may certainly be of some importance. And depending upon how things shake out the rest of this term, the rest of in the election, it may be that some employers who choose not to participate at this point would change their mind later, trying to back into the potential for that kind of legislation. But that legislation is not there now. And it's, you know, it's like the gap rule that says, well, until they actually enact it, we can't take it into account in doing your books. What else do we have here, Angie, that we ought to be trying to address?
Well, you kind of addressed quite a bit of there's a lot of questions about if Congress does forgive this, what happens to employers if they chose not to do this. You know, one thing I did want to kind of address on some of these is that once you have withheld Social Security tax, you know, remitting that to the IRS, because there is those rules on tax payments. And then also once you chose, like if September 1st was a payroll and you did not do this, you can't go back to September 1st because you've already withheld and remitted those taxes. So you have to do it going forward, not go backwards. So that's one of the things I wanted to kind of, you know, touch base on.
But that raises an interesting question, Angie. We remit, at least most employers remit these on a quarterly basis.
They remit the returns on a quarterly basis, but most employers withhold tax from their employees and they pay those taxes in usually within 3 days of their check date.
Okay, so that covers that.
Yep, unless you're a very small employer, will you be able to do it like on a monthly basis or a quarterly basis?
Okay, very good. I do want to make a note here. Those of you who are still looking for the link to the handout, if you have not looked in chat, Amy has included a link in chat, and that gives you, I believe, something that you could click on and get you there immediately. I would hope. And yes, in fact, it does. I just tested it. So those of you who are looking for a quick way to get that and in PDF form and then save it to your machines, please look back through chat, find where Amy has sent that to all of us, and go ahead and click through.
Yeah, I guess the last couple of things that I'm seeing here are, you know, you could start this anytime between September 1st and or after now this date. Current date going forward to December 31st, as long as the check date is December 31st. If you pay someone on January 1, those paychecks do not qualify for this. So you can start and stop this as an employer as you see. And then just know every pay period has to meet that threshold. So someone had asked if there was 3 paychecks in October for a biweekly. If they're all under that $4,000, all 3 of them can be used for this payroll tax deferral for the employee because each paycheck is below $4,000, as long as the person gave me an example of $3,600. So as long as they're under that, they are allowed to participate in it because that's the biweekly payroll. So it doesn't matter that there's 3 paychecks in that month. We have quite a few questions in here, but I think some of them kind of cover some of the same topics that we just went over. I believe everybody has our contact information on this documents that you guys received. So as you see, or if we didn't get to your question, then you can send us a message and we can get back to you.
I think there's one. Connie Nelson has just added one in that I find very interesting. Let's touch, Angie, if we could handle that one.
Yeah.
We talked about the bonus being, what happens if the bonus is paid or commissions, say, are paid with a particular payroll, what happens if that check comes through literally as a separate check, separate pay date? Do you have any thoughts on how that would be handled?
Yeah, I would say that if that comes through on a separate pay run, if that's like on like in between a bi-week period, the commission comes as a standalone, that check would be considered a standalone check. So then therefore that if the commission was 40,000, it wouldn't be allowed for that. The opt out, like the deferral. But if you had their biweekly paycheck the next week, then I'd say then that we go back into that they are now qualified back in to defer their Social Security tax.
Very good. All right. Well, again, on behalf of Eide Bailey, Angie, Amy, myself, thank you all for joining us. And again, you have our contact information. I will warn you that email generally is the best way to get a hold of anybody these days. And I will we'll turn things back to Amy to close down.
All right. Well, thank you all so much for attending, and thank you to our presenters, and we hope that everyone has a great rest of their day. Thanks, guys.